Hi, Matthew Cratter here from Trader University. And today I want to talk about how to use the RSI in different market environments. So the RSI is the Relative Strength Index. It was developed by Wells Wilder, who developed many great indicators. And the way it basically works is that it measures whether the market is overbought or oversold. So let's look here. We have a chart of GE, General Electric. And I put the RSI, I've inserted the RSI in the bottom here. And the period I'm using is 14, and it's looking at daily closes. So the traditional way to use the RSI is when the RSI closes above 70, it's a good time to go short. And you can see here with GE, the RSI first closed above 70 on this day, which was March 30th, 2016. And you can see that would have been a very good shorting opportunity. And you can basically hold that short until the RSI gets back down. Now, the two levels of the RSI are 70 for overbought and down here 30 for oversold. So you can see the way we traded GE here was when it got overbought, in other words, when the RSI was over 70, we would go short. And another great shorting opportunity over here. Now let me tell you a secret about RSI that a lot of people don't realize. The RSI works well in a sideways market. And you can see basically a sideways market is where the stock trades in a range. So here we have GE trading between 27 and 33. And if you're in a sideways market, you can basically go the opposite of RSI. So if RSI closes above 70, it's a good time to go short. If RSI closes below 30, it's a good time to go long. Now, where this breaks down is in a trending market, and many people get hurt because they don't realize this. So let's take a look at another stock. Here we have a chart of Apple, and these are daily bars. Now, I've also inserted the RSI here in the bottom. The red line here is 70. The blue line is 30. Now you can see that the RSI closes above 70, and then it basically stays above 70. And here it stays actually even higher above 70. It's staying around, in the 80s, in the 90s. And this is what happens in what we call a trending market environment. So this is Apple, the last, basically for 2017, or essentially since the 2016 election, been in a very strong uptrend. If I pull this down, you'll be able to see that a little bit better. And what happens when a stock is in a strong uptrend is that the RSI will stay overbought for an extended period of time. And if you try to short during a trending period like this, you're just going to get absolutely killed. We can see that Apple basically ran from about 105, it's now at 144. And so when you see the RSI overbought like this, you have to ask yourself, is it in a trending environment? And usually if it stays above it for an extended period of time, it means that you are in a trending environment and you want to trade with the trend, in which case you'd want to buy Apple and go long here. If you enjoyed this lecture, check out my book on Amazon, The Little Black Book of Stock Market Secrets. It's currently a bestseller, and I have a whole chapter in there, chapter 2, where I talk about trending markets and sideways markets and how to trade them, and I go into a lot more detail. Don't forget to subscribe to my YouTube channel, and I'll see you in the next video.